Fareeya Adam is CEO of Structured Products and Annuities at Momentum Wealth. And the theme of our conversation today is how do we incorporate certainty into the financial planning process? Welcome, Fareeya.
Thank you very much. It's nice to be here.
I think, Fareeya, let's begin with a quick intro from your side. Tell us a bit about your role at Momentum Wealth and your specific focus areas.
Okay, so at Momentum, I'm responsible for the guaranteed solutions that we offer to our clients. The primary focus is around guaranteed annuities and how we manage all aspects of the product line and the associated client service. We've got a very comprehensive offering around guaranteed income, and we're looking at expanding our offering of guaranteed solutions to different types of guaranteed returns, and
Okay.
hence structured products.
Our theme for today and for our conversation is incorporating certainty. What does certainty mean in the context of financial planning, and why is it so valuable and critical that we understand and work towards it?
So investment markets are uncertain. They always have been, and as we've seen recently, they can be very volatile. So it's impossible to predict market returns and know what will happen to the value of your investment over time. Some clients are able to withstand the uncertainty. For example, if you have enough years before you need some money, or if you have other sources of income, then it doesn't really worry you too much. But in other scenarios, it's just not palatable. For example, you could need the money as the main source of your income, or a client could be nearing retirement and can't afford to take any risks. And this is where guaranteed return products come into play. With these solutions, the insurance company typically takes away the doubt and uncertainty so that a client has peace of mind because they know exactly what they will receive and when they will receive it. And that's what provides certainty.
Yeah, I think that has never been as important as now because we live in uncertain times, right? And things change so fast. So I think that certainty is so critical. Financial planning often involves balancing certainty with growth because you want to know what you get, but you ultimately want your investment to grow, right? What advice would you give advisors who are trying to achieve the right mix between protecting their clients' futures and helping them pursue longer term goals?
Okay, so I think I want to almost discuss this in the context of retirement income. And I mean, financial advisors understand quite well the features of the product suites that are available, living and life annuities, one offering flexibility, the other offering certainty. But I think the product innovation that's happened in the last few years is around exactly what you talk about, where you can balance the growth potential with your certainty. So for this, it's important to understand what is the return profile that life annuities can offer. For example, currently in the market, a life annuity for a male client aged on average 60 years old offers you a yearly income of just over 8%, but increasing at 5% every year net of all fees. So you can think about this as a guaranteed drawdown of 8% in real terms. Now, incorporating an asset that provides this type of guaranteed return into a client's overall retirement portfolio actually gives clients and advisors a lot more flexibility around investing for growth. So I think understanding the return profiles, understanding the propositions, and understanding the optionality around this balance between these two is becoming more critical as we go along.
Faria, from your experience, what messages or strategies resonate best with clients when advisors discuss guaranteed annuities as part of the retirement plan?
Yeah, it's interesting. I know a few people that are retiring now, and it's quite a daunting prospect because, on the one hand, there's the financial elements around I'm not going to work, I'm not going to get an income, have I saved enough? But there's also, again, the lifestyle issues, right? Is where's my purpose? What do I do every day? So I think retirement is actually quite a difficult time for people. But really, when you look at it from a financial perspective, it's about wanting peace of mind that comes from certainty, but you also want the maximum benefit possible. None of us want to give up anything. I think at the end of the day, clients need to know that they will be okay. And the more information that we can share around how likely they are to be able to meet the expenses and not run out of money and not be dependent on others, the more comfortable they are going to be.
Do you feel that people are starting to get the message of saving earlier?
Look, I think that's always going to be a challenge because I think in many instances, even if people want to start saving earlier, they don't always have the
The capacity.
ability to start and the capacity to start saving earlier. I mean, the cost of living is high, especially in your younger ages when it's time to save, but you have more expenses because you have families, we're buying houses, we're having children that we need to take care of. So I think expenses are also high in the time of life that we should be saving. But
Yeah.
absolutely, I think if you can start contributing early, I think people are definitely starting to realize that.
Okay.
We've also seen on the Momentum Wealth book, I think we've had a lot less two-pot withdrawals than we anticipated. So I think people
That's
are also
good.
starting to realize that actually you shouldn't withdraw from your retirement savings unless you really, really need it. And we've seen that we have a very small percentage that do.
I think this two-part really opened up the conversation for insurers and for advisors to really have conversations with clients about retirement savings. And I get that from a lot of the insurers that I am interviewing, is that that opportunity was actually quite amazing, and that there is most certainly, like you say, people are starting to realize that more so than in the past. So yeah, definitely. Fareeya, Momentum's annuity range seems to address the fear of outliving one's savings. Can you unpack how features like the joint life option and guaranteed periods work to provide that security people so desperately need?
Mm. I read an article the other day. I thought it was quite an interesting way of positioning it. But the topic was really around how your children need you to be independent in retirement. And I think we talk a lot about, we hear nowadays about the sandwich generation, around people are having to look after themselves and their children and also their parents. And I
Yeah,
think that's quite a nice way of thinking about it, because we often think about inheritance in a guaranteed annuity, but really I think the main point is to make sure that you can cover your expenses. And
100%.
joint life options and guaranteed periods, I think about them very much as a bit of inheritance options also. The joint life is really an excellent way for a client to ensure that an income is certain for themselves and their life partner. And it pays out an income for as long as one of the two people is alive. So you can think about it as an income inheritance to your life partner. And we see recent stats show that about 47% of clients take this option, which I think is really quite valuable. A guaranteed term is a minimum number of years for which the income will be paid. So if the client lives longer than the guaranteed term, they'll continue to receive the income
Okay.
even after the guaranteed term ends. And if the client passes on during the guaranteed term, the remaining amount gets paid to the beneficiaries. That's what makes it a little bit of inheritance as well. But I think the main fear that it addresses is this fear of almost losing out and not getting my money back. So I think the guarantee terms are very useful for that. It puts a minimum total amount that the insurance company will pay out. So we've seen that's also used very, very well. About 80% of clients who use our Momentum Life annuities choose to add a guarantee term. So the majority of clients both use and value the feature.
I often remind my kids about the fact that they won't have to look after me, and their duty is to spoil me when I retire one day. Because it's like you say, I think it is the most important thing, is that the gift that you can give your kids is that you are independent,
Independent,
and that you
absolutely.
are done, you are not putting that burden on them with, that whole sandwich generation conversation, because it is such a reality. And I think you guys see that as well.
Yes,
The amount of kids that have to look after parents because of the fact
absolutely.
that they just like either didn't have the means or didn't realize,
The
you
impact.
know, time is actually much closer than you thought.
Absolutely. I
Scary.
think retirement comes much faster than
It
we
does.
realize.
It does.
Yes.
It does. I'm
Yes.
starting to, I tell people I'm starting to use the R word in some
More and
conversations.
more.
It's scary, and
It is
it's scary
scary.
because we still feel so young, but it is the reality. It's faster than you think. Inflation is top of mind for many retirees. Fareeya, what mechanisms do you guys offer to help clients keep up with rising costs?
Personally, I think this is the most important feature of the guaranteed annuity. It's the most, we offer certainty of income, but if you can offer guaranteed increases, which is obviously what a life annuity can give you, I think that that is critically valuable. So clients have the option of increasing their income at any rate from 0 to 20% each year, or to actually match future CPI rates. So if CPI goes higher than expected, you can match that. If it's lower than expected, you get lower increases.
Okay.
At Momentum, about 40% of clients still choose to have a level income. And that is a little bit concerning, I think. In these cases, the starting income will be high. So you start off because you haven't saved enough. The starting income is a very important metrics to consider. Starting income is high, but over time, the real value of that income really decreases significantly. And after 10 years, the real value of a level income drops by about 40%. After 20 years, it could drop by around 65%. Now, this is quite significant given that we have our average retirement age is between 60 and 65, right? So people can easily be receiving income for 20 or 30 years and need this income to actually sustain them for that period of time. So I think it's really vitally important to protect the real value of the income, and the guaranteed increases is a feature that clients and advisors must think very carefully about.
Okay, that is good advice. The Capital Protector blends guaranteed income with life insurance, another very critical aspect. Who is this designed for specifically, and what are its key benefits?
This one is also a nice one. I really like this
Yeah.
proposition because, like you say, it offers a life annuity and a whole life policy that's packaged together. And if you just look at the value proposition is quite compelling. So for example, let's say that a client invests 2 million into a capital protector product. He then receives an income stream, a guaranteed income stream as long as he's alive. And that income stream can increase at a guaranteed rate, can be a joint life annuity. But when he passes on, his beneficiaries receive the same 2 million that he invested as an insurance benefit. So it's a nice way of ensuring that you actually don't ever run out of money, but you also leave a legacy to your children or to your dependents, right? What is quite nice about the proposition is that the life cover is provided without medical underwriting. So you don't have to worry if you have any pre-medical conditions or anything like that, because you get the cover. And when your beneficiaries receive the life cover, it's net of tax and it's outside the estate because it's an insurance benefit.
Okay.
So really, I think that combination of, so the combination of an income and also of leaving a legacy can be quite powerful for people who want to leave something to their children.
Yeah, because there are people that can do it, can afford it, and wants to do it. So
Yes.
yeah, there is a market for that, most certainly. There are always misunderstandings, and people are not educated enough. What are some of the common misunderstandings about annuities, and how can advisors position them with more confidence, Fareeya?
Okay. I think the biggest thing comes from you put in a lump sum and you get a much smaller income that's paid out, right? I always think of it as it's the opposite of life cover, where you pay a small premium every month and then you get a big lump sum when the client passes away. Right. So this is almost the opposite of that. It's taking a big amount and then converting it into a small income, much smaller income stream. Right. So there can be this misperception that clients lose their capital, but really it's not true.
Okay.
Once you add things like guarantee terms and all the rest, you get that assurance. But at current annuity rates, a level annuity basically returns your purchase amount within a period of roughly 10 years. And then the income continues. So for an average client, say age 60, it means that all the income paid to them after they turn 70 is over and above the amount that they used to purchase the annuity. I think the misperception is often that people worry about what happens if I pass away too early. They don't realize that actually what you're protecting is the risk that you actually live for a very, very long time. But I think advisors have all the information that's relevant, and the industry can do a lot to help explain the nuances and the risks of particular scenarios to clients.
Listening to you talking, I just realized the importance of advisors, and
Absolutely.
I mean, there are so many little things that you have to take into account, and every single client is different, right? So
Absolutely.
how can you just make a decision on your own? So the advisor's role is so critical and powerful. Fareeya,
Absolutely.
looking ahead, what trends or innovations do you see shaping the future of specifically the guaranteed income space?
Mm. I think the product structures are fairly mature in our industry. I think the next layer of innovation is about how all the different pieces of information are presented to a client to enable them to make informed choices. So, like you say, the role of a financial advisor, every client's circumstances are different. Their balance between how much risk they want to take, or how much other assets they have, or their inheritance preferences, each client is an individual and the advisor needs to help them. So I think that the next product innovation is really going to be about providing information that helps people assess, how do I choose a guaranteed term? How do I choose a future increase so that I can protect myself against inflation? I also see a world, and you alluded to it, of the balance between certainty and growth. So I definitely see a world in which hybrid annuities and how you blend the certainty and flexibility are used a lot more than they are today. And advisors are going to start to better understand the return profiles and how to interpret them together.
That was very educational, Fareeya. Our audience is advisors, a critical part of your business, a critical part of our business. So maybe a last message to the advisor specifically.
Mm. I think it's quite a big responsibility to give advice to retiring clients because no one wants to be in a financially uncertain situation during their old age when there's little that they can do about it. So, guaranteed annuities are going to continue to play a very important role for advisors to consider in providing certainty to those clients. So, I would say that advisors should embrace the new options that are available. And the new options are available for new clients that are going into retirement, but it's also available for existing clients in living annuities, which I think is very powerful. And we have amazing tools that can help advisors to understand how to incorporate guarantees into retirement portfolios and the impact that it can have in extending the number of years for which a client's income is assured. And also, what's quite powerful is to reduce the return required for market linked assets. In a volatile environment that we have now, we can't always be assured of the return that we think we're going to get. So these are incredibly powerful measures, and they can dramatically improve client experiences during retirement. So I would really ask advisors to start interacting with that and trying to see what benefit they can give to their clients.
Thank you, Fareeya. I think they fulfill such a critical role, and the education part of that is more important, I think, than any one of us realize. So, thank you very much for your time. You play an important role in the industry in terms of the space that we have to fill with clients with that last stretch of their lives. So, thank you for continuing to innovate and try to really make it find the best solutions for advisors to give to their clients.
Thank you for the opportunity.
Thank you.